Good morning and welcome to the podcast on the fundamentals of the market. Dow fell more than 500 points to close out its worst week since October 2020. As traders worried the Federal Reserve could start raising rates sooner than expected. For the week, the 30-stock Dow lost 3.5%. The S&P 500 and Nasdaq were down by 1.9% and 0.2%, respectively. Week to date, the dollar index was headed for its best week in nearly 9 months. There may be more near-term selling pressure in gold, but at some point, bargain hunters could step in. Sensing a buying opportunity given that rising inflation has been historically bullish for precious metals. Oil futures reversed earlier losses on Friday after OPEC sources said the producer group expected limited U.S. oil output growth this year despite rising prices. Let's move on the result update of LIC Housing Finance. LIC Housing reported asset equity ratio of 11.5 times in March 2021 as compared to the proposed regulatory cap of 12 times. We expect the company to deliver about 15% earning per share CAGR during FY22 and 24 and medium-term return on equity of 13 to 14% on the back of 1.2% to 1.3% return on assets. LIC Housing reported higher than expected stress in Q4 FY21. We remain watchful asset quality performance. Increase in buffer on the balance sheet is significantly more comforting, driving higher medium-term growth and rise in fair value to 600 rupees. Up from rupees 430. At our fair value, LIC Housing will trade at 1.1 times book June 2023. Briefing on the company update of Ceat. Our research team have attended the analyst meet of Ceat. Following our key takeaway, the company reiterated its targets of 1. Increasing presence in the passenger vehicle and truck bus radial segments. 2. Maintaining market share in premium pricing in the two-wheeler segment, and 3. Scaling up the highly profitable specialty tires exports business. We believe that Ceat is taking the right steps, which should yield results over the medium term. However, profitability could be under pressure in the near term due to 1. Raw material inflation and 2. Adverse product mix. We maintain ADD on inexpensive valuations, fair value unchanged at rupees 1,500. Finally, pick of the week. We have chosen L&T as the pick of the week with buy rating along with an upside of 25.7% from current levels, which is equivalent to rupees 1850 on the back of 1. L&T is largest player engineering and construction player in India and a play on capex cycle revival and unlock theme. 2. L&T has healthy order book of rupees 3.3 lakh crores and order book appears healthy both on execution and profitability. 3. L&T has paid all of its free cash flows generation to shareholders and has not invested on a net basis in subsidiaries over last 5 years FY16 to 21. The company has set the stage to deliver high dividend payout ratio. 4. L&T reported a healthy and inline operating result in Q4 FY21 and reported a 6% and 14% year-on-year growth in the core engineering and construction business revenues and operating profit, respectively. 5. We factor 15% hit rate in L&T's rupees 9.6 lakh crores order prospects pipeline for FY22 and note strong visibility for growth over FY22 and FY23 based on the current order backlog. 6. We expect mid to high teens growth in revenues, EBITDA, PAT over FY20 to 23. Thank you and have a great day.